Hello and welcome back to P7. Today we're going to talk about B3 professional liability. This is going to be a very small topic. I hope so. It's not even going to take 10 minutes for me to finish it up. And then you'll be talking about practice management. Now this is new. Okay, you guys haven't really talked about this in P7, F8. So this is going to be important. Then we're going to talk about the audit of historical financial information, other assignments. That's new to P7 as well. Now, I'm sorry, I'm new to P7 means that you haven't studied this before in F8, alright? Then you have reporting, then you have current issues. Current issues, depends, alright? These are the things that I really am not really bothered. Okay, I want you guys to do question number 1, obviously, that's compulsory. 2, 3, 4, I want you guys to take one question from audit risk or audit whatever there is and one question from reporting. Ignore current issues. But we'll talk about that in a few weeks, okay? Coming back to where we currently are, we are talking about when are auditor liable to their client. And to be honest with you, never. They're never liable because they're right in their audit report. When I'm preparing an audit report, my auditor, my audit partner, who's the signing partner of the firm, he has a special other matter paragraph always saying that this report only belongs to the management. No one else can sue them for it. Even the lawyers can take it and sue them. It's in the report. It's written there. That's what they do. That's what they like to do. They say it's only for the management's purpose. That's it. No one else can come and say that, hey, dude, you made a mistake. So what? Who are you? Can you do it then? No, you can't. Go away from here. The auditor has a contract with a client. Okay. Now, this means that you have to take reasonable care and skill. You need to have enough skills. And you have to be very careful with the work that you're doing. You need to take them with care, okay? For example, some guy just pops up out of nowhere and starts saying that I can teach you P7. You might be happy to hear that, yeah, he can teach me P7, that's nice. But, is he good enough? Is he really that good? You never know. You're scared of him, you know? So I'm just gonna say, just to be careful, you need to make sure he has reasonable skills and has care, you know, he cares for you. And when I say he cares for you, it doesn't mean you have to have him as your boyfriend or girlfriend. I just mean that, you know, take care of. Don't take care of you, but in other words, I just don't even know how to explain that. I'm just gonna get out of there, okay? A very awkward position I put myself in, but I'm just gonna take myself out of there. Sorry about that. So how can you show due care and due skill and care? You have to apply IFRS and ISOs. ISOs are International Standards on Auditing. Some people came up to me and said, you know, they were asking me, hey, do we need to have ISO 710, ISO 420 or something? Yeah. Do you need to remember all the numbers of account and auditing standards? Guys, no. One word answer, no. You don't need that. Nobody needs that. Who cares? Yeah, accounting standards, that's a different story. Like, for example, you have a provision problem, something going on in your audit evidence and audit procedure came. So you can say inspect the items and you can review your IS 37 for provisional matters and stuff. That's a different story. Auditing standards, sorry. You don't have to remember it. If you remember it, you're a fool. You're just wasting your time. Yeah, you might be smart, you might start remembering them, but I didn't remember it. I'm doing fine. Come on. Trust me on that. I'm an audit manager. Trust me, guys. Being sued for negligence. Now, there are 3 tests needs to be proven. Now, 3 things if you don't do, your client or other parties can sue you for negligence. Meaning that you didn't do the work properly. Okay? Duty of care owed. Now, this is obvious for an audit client that you didn't care. You just went there and said, yeah, okay, fine, do that. Do you have that report? Sorry, it's not with me right now, but I can give it to you in a few weeks. Yeah, sure, whatever. Just throw it away. So you're not showing care, are you? If you do that, you're in trouble, mate. Breach of that duty. You're giving an incurred opinion, or you're not following the international standards on auditing. Now, client suffered a financial loss. The client won't have made this law otherwise. Now, do you have care? Do you do the duty of care? The client is automatic. You know, it's automatic. They care for it. They care for their own self, right? You won't harm yourself. breach? Did you breach? It all needs proving, guys. Now, as much stupid as looks, it's not important. So even if you guys are a bit like, what's going on here? Do we have to? Who is liable for what? It's common sense. In the scenario, it will say to you that you didn't do the work properly, or you did the work properly, or something happened, stuff like that. So, I'm sorry, just got distracted with text messages. Where were I? Yeah, about this, about the exam. So in the exam, first of all, you won't have these type of questions. If you do, it's a very common sense. Okay, you don't need a table to remember what you need proving and what you not. Okay. Limiting liability to the client. Now, you can have a limited liability partnerships. Uh, you can have a limited liability agreements. A lot of firms, the audit firms, have become partnership as the limited liability partners. A limited liability partnership and the audit partners. That's the reason you call them audit partners, because they're partners. They're not owners of the company or stuff like that, because they're just limiting themselves. Even though there's something very, very bad happens, something like Enron happens, where the auditors were involved themselves. What you would do is that you basically, even if you're sued and you're proven guilty, at least you're safe, your assets saved. You might have to serve some jail time, but you made some assets, okay? You're happy with those assets. At least your family is doing good, you know. You are getting cracked down there in the jail, but still my family is happy, so yeah, good enough. Anyway, when are now this was when are auditors liable to uh, the client. Now, when are liable to the third party, and it also needs proving. Now, everybody needs proving. Everything needs proving. As for an auditor, any third party tries to get involved, they need to prove it. Now, the proving can be seen of the damage that you've done. For example, if your client is in timber industry or something, and they're using a lot of wood, so a lot of creeps from creeks will appear, and they will be like, hey, you're wasting the environment, and don't do this, don't do that, don't make couches, don't be comfortable with your life, because in a bazillion years we're gonna all die. What are we gonna leave for our great grandchildren and stuff? So I mean, I don't even understand those people. You never know. Just live your life happily. Don't use petrol, use this, use that, use an electronic car, a hybrid car. um, those people are real Nazis. We always say Nazis are bad people. Those people are Nazis. I don't know about you guys, I don't really know, but I feel those people are just pushing you, and that's not good. You can't even say it, they'll put you in guilt, right? So as an auditor, I've came across these kind of things, and I'm pretty much pissed off. So you guys can read into this and see if you have problems, what are the consequences and stuff. Trust me, nothing. This is nothing. Trust me on that. Okay, final thing before we end the section B of our syllabus. There's something called an expectation gap. I use this in my personal life a lot, giving people examples of expectation gap. Hey, don't. There's an expectation gap all the time and stuff like that. Now, client's expectation and your audit work can be different. Client may be thinking, yeah, he's gonna find mistakes. Hey, remember there was this check back in 2014? Now we are in 2017, all right? Just imagine that. We are in 2017. You don't have to imagine that, but imagine this scenario where you go for an audit, and the client and I'm okay. You know what? I'm gonna give you an example. I went for an audit for this condo, a very big condo. They were from a very posh area, and very beautiful condo, a lot of facilities and stuff. And when I went there, this auditor, I had this field audit conducted. I was supposed to be there for the whole week in a different place, so I used to go there. Traveling was a bit of a hassle, but anyway, this client, the accountant of our condo management, they came up to me and said, the bank reconciliation doesn't balance. The cash flow is not balancing. And I was like, okay, what reason would you give for me? What reason would you give for that? And she said to me that the bank reconciliation doesn't balance because there's a check that was bounced a few years ago, and since then they're just putting a small figure down there saying an adjustment. They just adjust every month's bank reconciliation. It just didn't even make any sense to me. Now when I looked into it, it was very disturbing. It was really disturbing, and we had to fix it. We had to go all the way back in 2014 and do the whole new reconciliation for all the months and made sure it looked correct. And we had to have a new note in the audit report stating what happened with the bank. It was under the cash and bank notes to financial statements. A very weird scenario, but it happens, you know. Now, this is an expectation gap. Now, the client might be thinking that whatever mistake they made, you have to fix it. Actually, no, you're an auditor. You have to find it. You just have to detect it. You have to just look into it. You go to the zoo, what do? Do you start feeding the monkeys? No, you don't. What do you really do? You just look at them, you laugh at them, you throw things at them, right? You don't do anything, you just detect them, you just observe them. When you go and start putting diapers on them and start feeding them, that's where there's problem. That's where some problems occur, all right? Now, management misunderstanding their responsibilities. Now, management's responsibility is to, guys, we've studied about this. I want you to say this. I'm going to keep quiet. I want you to say this out loud. Yes, avoid fraud and error. They are misunderstanding the scope of the audit. We are just here to detect, guys, if the zookeepers stop feeding all the animals because we'll take our bread and feed them our sandwiches, things are going to be bad because I don't like sharing my sandwich or fries with people, right? Nobody does, trust me. I hate sharing my sandwich with people. You want to give a bite? Take your own sandwich. Take a bite from that. Management misunderstanding that their responsibility is to detect fraud. We don't detect fraud. Do we detect fraud? No. Forensics detect fraud. Auditors don't do that. Auditors will just detect errors and misstatements. Fraud happens? Yeah, it happens. It can happen. It's a possibility. We know that at the back of our head, we know something is going to happen. Something bad can happen. Are we bothered with it? I don't think so. Management think that the auditor are liable for any errors. Like I just explained to you with my example, they're not. It's not auditor's fault that you're stupid. It's your own fault. Now, in the audit report, it's the responsibilities paragraph. The auditors perform on a test basis. It's on a sample basis, in other words. So, in an engagement letter, you have to make sure you tell the responsibilities of the management and the auditor, and then what's your nature, scope, and purpose of the audit. Once you have told that, things will be fine. And guys, I'll see you next time with practice management, a beautiful topic, and trust me, you're gonna love it. Thank you very much, and I hope I'll see you guys soon. Thank you.